Hi, welcome to another edition of BigTrends.com's free indicator little courses. Here in the next 5 minutes we're going to talk about Bollinger Bands and a couple of the additional indicators that are created off of this pretty famous technical indicator. So let's take a quick look here at Trixie charts on the new BigTrends.com. And of course what we're going to do is go over here and let's see here. First I want to go to the next tab, SKF. Right now we're looking at the Qs. SKF is the ticker symbol for the Ultra Short Financials ETF, which trades 2 times double the leverage inverse of the financial index. So I'm going to go over here to add an indicator, and I'm going to choose Bollinger Bands. Scroll up here to the top, and I'm going to do 20 bar 2 standard deviations. So it's taking into account 20 bars. In this case we're looking at days, so 20 days worth of price action with 2 standard deviations. These are the settings that we typically use. Now this is the Bollinger percentage B, which I wanted to show next, but we'll keep it on there. We want to keep the same. Okay, here, so you can see here that we've got the Bollinger Bands applied to the daily SKF. Now why are we looking at the SKF? The SKF is similar to, or trades a lot like, a volatility index, much like the VIX, the CBOE volatility index, which is based on market sentiment. Sentiment trades based on, in large part, standard deviations. So the Bollinger Bands are basically going to look at a certain moving average, in this case a 20-day moving average, and then it's going to plot 2 standard deviations away on the upside and the bottom side of that moving average. That is what we're looking at here in this chart. As you can see here, the upper and lower part. So the purpose of a Bollinger Band is that typically when you see it break outside either the upside or the downside, that you will see a reversal occur. It's typically effective on sentiment type moving trends like an ultra short ETF, which trades a lot like the VIX, which is the fear index. So try not to move too fast, but you can see here that whenever you see a break outside, and typically we look for a couple of breaks outside, typically 2 breaks outside the Bollinger Band, then you'll see it reverse. Now we can take an even further step back on a weekly basis. Keep in mind Bollinger Bands are very helpful on many different time frames. So lots of different things you can do with a Bollinger Band, but probably one of the most well-known technical indicators out there, the bottom line is that it is typically used for, in my view, not necessarily trend analysis, because what we're looking for are super strong trends. Bollinger Bands, in my view, should be used for things that don't necessarily trend on a large part, like sentiment, like the VIX, like a very volatile stock, like a leveraged ETF. If you're planning on trading this leveraged ETF, do me a favor and look at it on an intraday basis. This is going to help you stomach the big moves, and you'll be more successful in the end. So keep an eye on the Bollinger Bands. Perhaps look about selling it short when it breaks towards the top there, and you can see it goes from 254 all the way down to about 113. Obviously about a 150 point move in just about 5 or 6 days. So Bollinger Bands are very, very helpful. Come over to BigTrends.com to check out this Trixie chart for yourself, and go to 2freeclasses.com to get 2 free hour-plus long classes from BigTrends.com.